Well, companies have reported concrete ambitions to keep climate change on the boardroom agenda by providing feedback on the carbon intensity of their operations and their plans to curb these. This according to the 2012 results of the Carbon Disclosure Project, which provides insight into how seriously South African companies are considering their emissions. Nerina Visser, head of Beta Solutions at Nedbank Capital, joins us now for more. Nerina, thanks so much for joining us this afternoon. Well, we heard yesterday that the JSE's top 100 companies are quite environmentally responsible, from a global perspective. How much attention do investors really pay to how responsible companies are in this regard?
Actually a lot, Alishia. If you look at the Carbon Disclosure Project worldwide, this is a UK not-for-profit organisation, and they have got 655 institutional investment companies worldwide who follow what they do, and this is $78 trillion of assets under management that are actually managed according to these results. So a serious amount of money, and certainly a serious topic, and something which I think increasingly not just investors, but obviously, as you say, boardrooms and corporates are taking to heart. It's good, obviously, for us to see, because I think it does talk not just to the sustainability of the environment, but we certainly see it also running through to the sustainability of business practices. And certainly the companies that care enough about the environment also manage their companies on a more sustainable basis, which obviously must be good for investment performance.
Mm-hmm. Nerina, I'm just going to back up what you've just said now, because I received this media release from Goldfields this morning. Goldfields in 2010 and 2011 ranked number 1 out of 100. It slipped down to second in 2012 with a score of 99 out of 100. But listen to what Nick Holland, the CEO, says. He says, "This ranking is critical for us, as it shows that we are not just transparent about disclosing our carbon footprint, but we also see this as a proxy. Electricity can be seen as a proxy for carbon, and since we have reduced our electricity consumption over the past 5 years, this has had a beneficial impact on our carbon emissions." Now, if I'm an investor and I'm looking at that, and if they've reduced their electricity usage, then that means they've reduced their costs. So as an investor, that's good. And I mean, maybe this is why it's so important to the investment community.
Absolutely. And Lindsay, it's not just that they've reduced their expenses for electricity, but what Goldfields have actually done is they're actually using the methane gas, which is in the deep level mines, so dangerous. They extract that methane gas and they convert that to an alternative source of energy, which also makes it safer in terms of the mine. So yes, they reduce their expenses, but they also improve production conditions and safety in the mine, and they actually get carbon credits for what they're doing, and that has got a revenue line. So really on more than just a single level being expenses, by doing what they are doing, they're actually improving their financial performance, and that is why the investment performance is boosted by doing the environmentally correct thing, as is clearly seen in the case of Goldfields. I just want to pick up on something that you highlighted there, because I think a lot of publicity was given yesterday to the fact that Exxaro was the top performing company and Goldfields had slipped to second place. This was based on their disclosure scores, so the level to which they actually disclose their information. Exxaro scored a perfect 100% out of that. Goldfields scored 99% and Harmony 98%. What is a lot more important, of course, is what is their performance in terms of the reduction of their emissions. And in this context, Goldfields remain an A performer. Last year in South Africa, out of the top 100 companies, we only had 2 companies that made the top band, the A band, which is really in the global leadership index also. And Goldfields was one of those 2 companies, and it remains in the A band. Exxaro, although they have a higher score in terms of disclosure, performs slightly worse. They're in the B band, so still definitely not bad, but I think it's important to differentiate between the disclosure scores and then the performance scores.
Where you're highlighting that, I mean, overall, how are we doing in terms of actually seeing disclosure translate into performance?
South Africa is doing exceptionally well. Let's even start with not even disclosure, but actually participation in this project. South Africa has actually got the second highest participation rate worldwide. We're second only after Europe at its participation rate of 78%. So that's that's very good. In terms of our disclosure scores, the top 10% of South African companies have actually improved their disclosure to between 95 and 100%. Excellent disclosure. Performance-wise, however, I think is brilliant. Last year we had only 2 companies in the A band in the Global Leadership Index. This year 6 of our top 100 companies made it into that A band. And this is based on more onerous performance requirements. So not only have they upped their game relative to 2011, but they've even upped their game based on more onerous requirements. And for example, this requires that they had to reduce their carbon emissions by at least 3%, and not just something that they say, they actually have to have it independently verified in terms of their emissions. So this is not just about saying the right things and having all sorts of feel-good things in their integrated reports. These are real measurable carbon emission reductions that our companies are doing. So an excellent performance from South African Incorporated.
Well done, South Africa. Yeah, and if we can apply that to other areas, then we'll be on the right track. It says here, Nerina, the top 3 companies in the CDP, all in the mining sector. We've already mentioned that. But of course, that's got a lot to do with the nature of the business that they're in. It's very, very energy intensive. And because they've had such a poor reputation in the past, environmentally anyway, which is being corrected, of course, but they have had a poor reputation. It's probably been easier for them to comply and also look rather good. But when you've got a company like Woolworths, which is mentioned here, and Pick and Pay, they're not so energy intensive. How on earth do they rise up the ranks? Do they get more energy efficient distribution trucks and things like that? How does it work?
That's certainly part of it. So if you look at a company like Woolworths, they actually happen to be one of these 6 companies that have got an A performance rating, so they're also in the Global Leadership Index according to that. And in the case of Woolworths, they actually engage very actively into their supply chain as well. So they don't only focus on their own operations, but they also look at who supplies them. They try and source close to their shops and to their distribution channels. So for them, it's not just about energy efficiency, but obviously also in terms of the carbon impact. And when you look at the agricultural side of it, sort of for the Farming for Good initiatives that they've got, it's a much broader based initiative that Woolworths, for example, would have. A similar sort of situation I think we would find when we look at, for example, SAB Miller, also a huge distribution network. So clearly their emissions in terms of the distribution and the transport side of things obviously affect them a lot more than it would maybe a company that doesn't have a distribution network. So each company within their sector is evaluated relative to the sectoral comparative in the world. So companies are not compared just on a regional basis, so within South Africa, but they're very much compared to their global equivalents, and really their performance is measured according to that.
Nerina, what's very interesting is that of the 2 listed newspaper groups I'm picking up here, Naspers participated in the previous years without wanting their information disclosed, and then this year declined to participate outright. Caxton was not on the list this year, but last year disclosed 129,000 tonnes. What does that mean, and what does that tell investors out there?
It's very difficult, and I don't want to read something necessarily into it. They are the exception rather than the rule, but it is interesting that you highlight that the newspaper or the media sector is not participating in it. I don't know whether it's a case of that they think it's too onerous to participate in it, or whether they are concerned about disclosing what their carbon impact is. I don't want to read too much into it. But another sector that we find interesting that's also not disclosing very well is actually the real estate sector. And if you think in terms of our real estate sector, the one major exception there, I must hasten to add, is Growthpoint. Growthpoint actually performs very well, both in terms of disclosure and performance. So it can be done. I think it shows that if the commitment is there from management, they can do it and they will do it. Last year, we picked up on an interesting trend that there were a couple of companies that in South Africa across different sectors who were hesitant to disclose, like Naspers that you just mentioned. They might be doing a lot of these things internally, but they don't want to participate in the international disclosure picture. And this might be a personal opinion of the management, that it's part and parcel of not wanting to disclose their business practices. It might be a lot more sinister than that. I don't want to read too much into that.
Nerina, how far are we away from a meeting that goes like this? A group of investment professionals at Nedbank Capital sits down and says, right, let's analyse this company now. We like the management, that's great. We like the geographical portfolio. We like the sector of the economy that this company works in. Management's great. Earnings are fantastic. But what about their CDP ranking? How far away are we from an investment decision being made because of what we've just been talking about?
Oh, Lindsay, it's already happening. We are already there. It is happening both on the corporate finance and investment banking side, but also in the investment portfolio side. So certainly some of your more progressive investment managers, I immediately think of the likes of Element Investment Managers, I think of Investec, I think of many of our large investment managers that have dedicated ESG analysts and portfolio managers that focus specifically on the ESG, the environmental, social and governance aspects, and take these specifically into account when they make their investment decisions. But certainly at Nedbank Capital also in terms of our investment banking and corporate finance initiatives, that is exactly what happens. We do sit down with the FDs and with the management of these companies and engage with them to encourage, obviously, to try and reduce carbon impact, but also to look at ways that we can assist them in converting existing carbon intensive businesses into businesses that focus on renewable energy, for example. Nedbank is huge in terms of the refit program that government has put out there in terms of renewable energy projects. So we actively engage with the companies to actually encourage this. So it is happening on a daily basis already.